also the beneficiaries who are today attending this program. So I'm thankful to everyone for this summit. Now I will like to hand over to our this particular thing to our next speaker, which is Mr. Ramesh Kalasam. I'll give a brief introduction of Mr. Ramesh Kalasam. Mr. Ramesh, for everyone to know that he is our advisory board member of Jeevitam, and he is also my mentor. Uh, Mr. Ramesh Kalasam has over 2 decades of experience in industry and government. His core strengths is in leadership, strategy, formulation, implementation, building business, coalitions, policy advocacy, government relations, crisis management, business development. I think I can go on and on. I whenever I meet him, I spend hours with him. There is so much in him. He is instrumental in changing so many policies, and he's the spokesperson wherein the government and the industry listens to him. I have seen his various articles in various newspapers. He is person who is an experience of having worked in the various first of their kind path-breaking projects across sectors, business opportunities, policy changes. He has been part of various government and industry committees on ICT, education, health, governance, policy, security, energy. Wow, I can go on and on, Mr. Ramesh, sir. Right. A very warm welcome to you. And we always call you for setting the tone and setting the whole, for this, the agenda for this meeting. So over to you, Ramesh, sir.
Thank you so much, Manish. Good morning to all of you. I hope I am audible and clear.
Yes, sir.
Okay, thanks.
Yes,
Thanks for having me speak on this important topic. This is a topic which has been very dear to me for the past so many years, and more so post-COVID, when we saw a lot of people lose their near and dear ones, and the rest of the family members did not even understand the basics of where money is, how to transact, how to even handle the basics of banking and so on. And therefore reinforce the fact, unfortunately, in a bad way, on the need for financial literacy amongst people. Now, financial literacy, as you know, is very important for every individual's personal growth. I mean, just like people stress on literacy, financial literacy is the next thing. Digital literacy is the other important thing, which has now become, because most of the financial transactions have gone digital. So financial literacy is basically, I would say, the knowledge of managing your money, managing your finance, and how do you live life? How do you manage where you get your money from? How do you spend it? How do you save it? And so on. And basically, I would say that financial literacy gives you the education required, the basic education and common sense required to make informed choices of how you use your money. And huge case point for a company like Jeevitam, a startup like Jeevitam, to get into, primarily because you are touching at the bottom of the pyramid, and that's the core consumer of the need for financial literacy, I would say. Now, going back to my favorite topic on statistics, despite having a population of now 1.4 billion people, the kind of data points that come out tell us that more than 76% of this 1.4 billion people have basic or no understanding of financial literacy. And that is also because in many cases, whether it is, we call it the upbringing or the manners of things, the money matters are given to you only when you become an adult. And in the process, we actually take away the prime learning years of an individual. We are not saying that give money to spend, but at least teach them how to use the money. And I think it's an important thing which we need to inculcate for the parents of tomorrow to imbibe it in their children, which means that our target audience today continues to be students and adults and people who have become adults, to ensure that we grow into a financially literate country. So 76% of adult population not having basic understanding of financial concepts. What can we achieve through such an important discussion that we are having, or a manthan that we are having today, and Jeevitam being a great platform to pioneer this thought process, is can Jeevitam take on itself that it will strive to make India financially literate by this many years, right? I mean, that should be a flag we should fly. today to say that how do we make India financially literate or the top financially literate country in the world? Now, the target for that, fortunately, they have picked up. They are working with the likes of CBSE and more. And therefore, it is the teachers who can teach and imbibe it amongst children. And therefore, it's a great segment they have picked up. And more needs to be done. And therefore, it's also a huge opportunity. Now, if we look at what India can do is not only are you imbibing financial literacy, you're also therefore converting the workforce of tomorrow into a financially literate one, which is also very critical because more often we tend to go for literacy and at most digital literacy to find a livelihood. But then what do you do with the money that you earn is something we don't spend time on. And therefore, this is a great kind of an opportunity. Now, somebody was asking me the other day when I was talking about financial literacy about US must be a great financial literate country. And interestingly, it made me look into US history. And if you look at US has a equally poor history of establishing standards for financial literacy. In fact, the first recorded mention of financial literacy goes back to the founding fathers of US, Benjamin Franklin and John Adams, who had written about it 100 years back. Then you had the Smith-Lever Act, which brought in the concept of formal education for financial literacy when the Cooperative Extension Service was created. 2003 is when the Financial Literacy and Education Commission was established subsequently by George Bush, who signed an order in 2008, subsequently creating an advisory council for financial literacy. So, I mean, we are not far behind, but I think we have always this advantage of leapfrogging. Today, we are leapfrogged in the digital literacy space, or rather digital payment space, I would say. We are telling the world how digital payments are to be done. So I think it's a matter of time we build this foundation. So here we build the building of having digital payments. We didn't do the basic foundation work of financial literacy. So we can always work backwards and now say, look, the world has gone into digital payments, but you need to still understand the basics. And what can it do? I think we also work heavily with the gig economy space as Jeevitam. And therefore, it is very critical for companies like Jeevitam who are working in this important space to work towards financial literacy, also for not only gig workers, but also the entire ecosystem of teachers and everybody who is connected with the economy. And the answer is everybody is connected with the economy. So therefore, the whole population becomes your target. Because financial literacy helps you secure your family's future, achieve your financial goals, become Atmanirbhar, I would say. And more importantly, wealth creation, which is my favorite topic, because unless we create wealth, we as a nation cannot progress. Nations which have created wealth, even if it was in the hands of few individuals, have seen tremendous progress. And we need to create wealth. We are a democracy and wealth creation is very core. Now, if you look at RBI in 2020 came out with 5 core action points for promoting financial education, which included various things, right from school children to adults to community participation and collaboration with various stakeholders. The National Strategy for Financial Education, which is 2020 to 25 NSFE, released by RBI, actually suggested a multi-stakeholder approach for creating a financially aware and empowered India. That's what RBI stressed on. And they went on the concept of 5 C's, which said content, capacity, community, communication, and collaboration. That's what RBI looked at. Apart from that, of course, it is also important, and we are already seeing 4 financial sector regulators, which is RBI, SEBI, IRDAI, PFRDA, all stressing on the fact for need for awareness creation and financial literacy. However, I think this is the opportunity and this is also the challenge, because awareness creation can be construed as anything from me creating an Instagram reel and trying to make it viral, or saying mutual fund sahi hai and nobody understanding necessarily the whole crux of it, to even ad campaigns, to looking at how many clicks came into that, to actually going down to the grassroots and making people understand in a classroom model or in a video model. And I think that is the crux of the whole thing that can take things forward. Now, the other important segment that we should also not miss, I would say adults is one section. The second section for me, which is very critical, is women, who constitute 48.39% of the population. Let's keep it 49%. It is natural that one aims under the fifth Sustainable Development Goal on gender equality in is financial inclusion and financial literacy, which is crucial for women's economic development. And I think that is another area which Jeevitam works on and should work on further, which is very critical for us to achieve this financial literacy, because that's 50% of the population. And then, of course, the Pradhan Mantri Yojanas, which are there, are aimed towards financial inclusion. We need to add that layer of financial literacy. And last but not the least, I would come to youth, because youth are the future. The youth are today sitting in schools, colleges, or beginning to join the workforce. It is at this crucial layer and juncture that financial literacy needs to be imparted to them. And initiatives that Jeevitam is already working on with CBSE are examples in this regard. So financial literacy, I would sum up to say, is a crucial life skill that one needs to possess, because apart from food, clothing, and shelter, this is what keeps you going further in life to adapt and survive. So whether it is savings, budgeting, financial planning, all these should be imparted as part of training for students. I'm not saying impart them in the curriculum necessarily, that would be one way, but even beyond that, intervention should be on a continuous basis to ensure that people are engaged and it runs in their blood when they become an adult. So I would summarize with that, and it's a great initiative. I would like to thank Jeevitam for coming up with this wonderful idea. And probably the slogan should be India financially literate, the most financially literate country in the world. With that, I would end. Thank you so much.
It is always so enlightening, sir, to hear you out. And today you have actually set the tone, for this summit, which is there, which is very, very critical for us. I thank you very much, sir, for your presence and your support, for your guidance. You keep mentoring us, you keep guiding us strategically. I think we have a lot way to cover up. This is, I believe, it's only a beginning, which we have made. So thank you, Ramesh sir, for enlightening us and taking us through your mind and the opportunity which is there for all of us, and how Jeevitam is rightly poised to tap into this opportunity and take it to the next level. Thank you very much, sir, Ravi sir.
Thank you.
So now I'll go to the next thing. I will first of all, before I start, I will like to before I hand it over to Snail, I would like to talk something about Snail in this thing. So Snail has joined us a few months back, and she is an industry leader, and she is having over 3 decades of experience behind her. And the first time I met her, I saw in Snehal a very passionate person who was passionate about what she does. She's a very hardworking individual. Very rarely you see these sort of women who are so focused, so dedicated, so hardworking for specific the financial and digital literacy of the vulnerable segment. This is something what I saw in Snehal, which is core to her heart, right? If something which after doing your 30 years in the industry, what is that next thing which you want to do, which will make you positive about? So for us, we are very happy that yes, we have with us Snehal, who is leading this initiative, the financial and digital literacy initiative within Jeevitam. And knowing her, I think we will be she will be the thought leader. She will be the person who will take this whole initiative to the next level. So Snehal, thank you for being there for us and taking this initiative to the next level. Now this is your event, your show. Over to you, Snehal. Thank you.
Thank you so much, Munish. Always your words are encouraging, and overall, Jeevitam, I'm very thankful to all Jeevitam's co-founders that everybody puts in a lot of hard work, and the entire team put in a lot of hard works, and definitely we will reach to the next level with all the support which we get it from our stakeholders. Ramesh sir has given very wise and insightful conversation, and a lot of things to remember from his conversation. Two things which I like the most is that we have to cover 78% of population, and within that also women population, which is the core to the heart. Because I see many times that women are literally not literate; they are educated, but they are not financially literate. And I'm sure here there are Sunil sir from Sundaram Mutual Fund, Swaroop from Mirai and Kailash from HSBC, they will somewhat agree to my statement. I myself also don't call fully myself as a financial literate, though I'm there in the industry for 30 years, because somewhere you feel that lot of learning is there to learn further. Uh, Anyways, first of all, thank you, Sunil, sir, Swaroop, and Kailash for joining this session today. These three are our eminent speaker for the webinar topic, Investing for a Secure Financial Future and Risk Assessment. It is going to be a panel discussion. Before we start the panel discussion, where Munish is going to, do the question and answer and conversation with these three industry leaders and industry pioneers, I would definitely like to introduce each one of them, because they have put in hard work. They have put in their life, to the industry. And at least in few minutes, I definitely have to explain what they have done and express. So I'll start beginning with Kailash. Mr. Kailash Kulkarni is CEO of HSBC Mutual Fund. Mr. Kulkarni leads the functioning of key business verticals and is responsible for providing leadership towards the achievement of organization strategic goals to become one of the top leaders in the asset management space. Wish you all the best, Kailash. In his previous role with L&T Investment Management, Mr. Kailash Kulkarni was responsible for driving the overall business growth of the asset management company. He also led the marketing initiatives for L&T Financial Services, so basically for the entire group. Mr. Kailash Kulkarni has 32 years of work experience, of which 27 years has been various functions of business across BFSI. He was a member of SEBI Mutual Fund Advisory Committee and was on the board of Association of Mutual Funds of India. He had also headed the Financial Literacy Committee for AMFI in the past. Mr. Kailash Kulkarni is a management graduate from the Institute of Management Development and Research. He loves to travel the world and is passionate about adventure sports. That is very nice introduction, Kailash. I will move to the next. Mr. Swaroop Mohanty, CEO and Director. Mr. Mohanty is Chief Executive Officer, CEO, and Associate Director of Mirai Asset Management India Private Limited. He has over 28 years of experience in the field of financial services, including 20 years plus experience in asset management sales. He is overall responsible for the India AMC. He has been associated with AMC as head sales from July 2011. Mr. Mohanty holds a degree in PGD, BM, and BCom honors. Thanks, Farouk. Mr. Sunil Subramaniam, Sundaram Mutual Fund. Joined Sundaram Mutual Fund in September 2005 and then went into different roles like Vice President Retail Distribution, Executive Director Sales and Marketing, Director Sales and Global Operations, Deputy CEO, and CEO. Also on Board of Directors of Sundaram Asset Management, Singapore. Overall, 3 decades of work experience in the financial services sector across MNCs, public and private sector companies. Sunil sir has worked with State Bank of India, American Express Bank, and Bank of America. Sir is Masters in Business Administration from the Open University Business School, London, MSc graduate from IIT Madras, Certified Associate of the Indian Institute of Bankers. Sunil sir has been instrumental in expanding Sundaram Mutual Fund's footprint both domestically and internationally. During the 14 years he has been with Sundaram Mutual Fund, the AUM of Sundaram Mutual has been manifold growth. They have got different awards and sir has played instrumental role in it. The Economic Times Best Brands Award 2019, the Economic Times Best Brands Award in BFSI for 2 years in row, 2018 and 19. YouTube Creator Studio Silver Award from Google for reaching over 1 lakh subscribers and sharing original content on the YouTube. So this is just, I'm summing up the introductions of these 3, I would say, real heroes of the financial sectors. And I know them personally for last so many years. And it is my pleasure to invite them on this platform today and to have an interaction. Munish, handing over to you for the further question answers, please.
Thank you, Snail. Thank you for the introduction of everyone. First of all, my heartfelt acknowledgement and thanks to Mr. Kailash. I will have a heartfelt thanks to and acknowledgement to Mr. Sunil Subramaniam and Mr. Swaroop Mohanty. All three of you, a very much heartfelt, thankful and acknowledgement for being there for this summit, number one. for supporting this initiative, right? About for this financial literacy mission, whatever numbers what you see, which we had displayed earlier, these numbers would have not been possible if you people have not supported us. Uh, we are a startup, and when we do things right, which is little different, which is at scale, many times people don't believe, because you are a startup. They want track record, they want experience, right? Kailash, you were the first person to look at us and say, okay, I feel you guys are good, you will be able to impact, let me try out with you with few trainings. Same is with the Sundaram Mutual Fund, and same is with Mirai. You all three came out and supported us. When we looked into this whole initiative of financial literacy, we call it investor education programs, which mutual fund industry has been doing for some time now. The, there were two big problems which we saw in that. In fact, three. One, uh, there was, you wanted to do so much, but there was always, and you were doing training programs, you were not able to, many of the things which we saw is that we were not able to bring uh, the right number of people in the room. So many training sessions had 5 members, 10 members, few members in this whole particular thing. So one of the challenges which we came down to is, can you bring in 100 people in the room? Number one. Number two, the second challenge which the mutual fund industry gave it to us was getting the right profile, right? Which is, as I said, we brought in the teachers as one of the right profiles. I think that is what we have demonstrated, and what we have demonstrated, which Snehal keeps saying is problem at scale, right? There is a scale thing which we have done, which we have showcased. So Kailash sir, Mr. Sunil and Mr. Swaroop, I think this could not have been possible without your support. So big acknowledgement to you again. I mean it from my heart, right? We have long way to go, but ये आपके बिना नहीं हो पाएगा, right? So very clearly for that matter. Uh, Kailash, I'm going to come to you first because I know you from my ICCI days, and I know you have been our support, and you supported us first. You were the person who said, "I want to meet the CBSE director. I want to understand what actually you guys are doing," right? And you came on, you supported us. So for me, the first question to you, Kailash, is why you feel, you have heard Ramesh and you have heard Snehal talk about the financial literacy from a AMC point of view, from being the CEO of HSBC AMC, right? Congratulations for you for that, right? First of all, for your new role. What do you feel about this industry, right? And this whole initiative, Kailash?
Uh, Morning, Munish, and morning, all the participants. Firstly, thank you, Jeevitam, for inviting me to talk to so many participants. I think this is a fiduciary responsibility as well as a moral responsibility for all of us in the mutual fund industry to get more and more people financially literate. I think that is it's like a karma of us. We have to do it because it is a very important task for us to achieve. If we are even able to get some few people benefit out of this program, it's a big positive because their future lives become much more interesting, and they are able to live a much better life than what they were in the past. uh, I have been a great believer in the mutual fund industry. I've been in the industry for 27, 28 years now, and really love this industry. I think this industry helps people, uh, you know, manage their lives financially much better. And to that extent, we always want to educate more and more people. I think what Jeevitam is doing in terms of identifying teachers as a segment has a dual benefit. Teachers hopefully would be inspired by this program and talk to the students. And if at a young age, if the students start imparting some discipline in their financial lives, it is only going to benefit them. More importantly, hopefully, through these initiatives, if CBSE then decides to actually introduce curriculum at a 9 standard, 10 standards about basics of financial planning, I think it will be a very big win, not just for CBSE and the pupils, but also for India as a whole. So if you ask me, uh, what we want to achieve from this whole initiative and what we want to do and how confident we are. I think there is a very famous saying in English, and there are miles to go before I sleep, miles to go before I sleep. I think we have just taken the first and second step in a
Well,
long, uh, many more steps ahead to come.
yeah.
So I am very happy this initiative has been taken and wishing you all the best for that.
Thank you, Kailash. Your views are so enlightening. I think uh, we have just taken the first small step, right? I think that is something there. And this is very important because when I look into, I speak to many teachers. My wife herself is a teacher. And this program was also done in her school. And the first thing she came back to after the training was, why have you not made me financially literate and this particular, financially independent? So the impact which I saw at home only, my wife, said, I want to be financially self-dependent. So I think somewhere we are creating impact, and we are not only creating future for the children who are there, but yes, rightly said, 9-10 schools curriculum has to be there on that side. Now I'm going to go to our next speaker right over here, Mr. Sunil Subramaniam, who is the MD of Sundaram Mutual Fund. Sir, very warm welcome to you. I have not met you, I'm not, but I have heard quite a lot about you from Snehal. Thanks for supporting Jeevitam. Thanks for for coming for this summit, and thanks for your support in this thing. This question, which I asked question, I think this is very important question to get perspectives, various perspectives from the industry. So my first question to you will be, sir, to share your perspective. You have 4 decades of experience behind you, right? From your SBI days, right? You have seen this industry evolve, right? You have seen SBI is something, 9 years you have spent over there in SBI. I think so. You have a very good experience behind you, sir. I just wanted to understand from your perspective also why is this financial literacy is very important for the industry and for everyone as a whole.
Thank you. I would like to take a point upon what Snail had said, that she feels that even she is not fully financially literate. And taking up on from that point, see, I joined this industry about 17 years ago in 2005. And before that, I had already been in the financial industry, that's banking, for a previous 20 years. Okay. Now, the point is that when I joined this industry, I did not know anything about financial planning. I knew only about lending. I knew about how to mobilize deposits and lend. But that was purely a professional. As a personal planning, right? I was typically going by stock tips given by people. I used to buy stocks, invest in IPOs, very random basis. And the time allocated to that was very, very limited. So only through this industry, I realized all these goal planning, financial planning, risk assessment, only in the last 17 years. So I was just wondering that if only I had got this 20 years prior to that, when I started earning my first paycheck, how much better I could have been financially well off. That was one thing. The second thing which I found is that, large masses of people, right? Since I was head of retail distribution, I've been meeting lots of people. The mutual industry has 100,000 empaneled registered, distributors. Despite that, the mutual fund penetration in our country is very, very low. Just reached double digits now. Now, what is the reason for that? You have an army of people trying to sell. That's because what is happening is that there's no base catchment of people at least having a basic knowledge of financial literacy to which these products could then be sold. So there's entirely a push product. There was no buy. There was not a bought product, but a push product. That led to this. But when you dig deeper into this, and then you realize that, why is that like that, right? One is, of course, is that please remember that as a large nation, we are probably the only nation in the world who does not provide social security for people post their earning years.
Yes.
Right? Every country has old age people pension. They care. I know countries take care of health fully for their citizens, like UK and Greece. Nothing from our side. People are left on their own. And as historically people depend on their children to take care of themselves, this whole joint family going into nuclear family has led them rudderless, because neither they have been able to save enough, one. The second is that we are basically an agrarian nation with more than 70% of our people living in rural. So historically, right, pre-independence and going back into centuries, our life has always been monsoon dependent, drought, famine, and then surplus, famine and surplus. So uncertainty has been such a big part of India's mentality that people have tended to rely on two things. One is physical assets, because they feel comfort from gold, from real estate and all of that. The second thing they do is they look for safety in terms of a fixed rate of return. FDs from banks, FDs from post office, FDs from blade companies, FDs from anybody who sets up a finance company gets. So this is what is hurting them, because the common realization that both of these consistently don't beat inflation, right? And hence, whatever they say, yes, real estate over a long term, it has delivered value. But over a period of time, they finally that suddenly post-retirement, they are in a very deep, deep distress because children have gone away, not taking care of them, and their assets are locked up in gold, which they monetize then by taking gold loans. So it's the whole thing has been so misengineered, so to speak, because of this. And hence, financial literacy is important because as a self-reliant nation, right, each person must become aware at a very young age of what is inflation, what are my goals, how do I plan, how do I not depend on my children. So I think this, you have to start young. And I think that's where, for me, this initiative is close to my heart, because the CBSE being the largest training system in the country, right? And it's a train the trainer, that if you train the teacher, each teacher reaches out to 1,000 people.
Yes.
Right, in their career.
Right.
So I think that it's the catalyst. So I think this is the right way, because we've tried the other way by putting a battering ram of distributors at customers. Whereas this way, if they are prepared, there is a receptacle that, oh, okay, goal planning is important. Inflation has to be countered. Fixed returns are not necessarily fixed in terms of meeting my goals. And so what are the alternatives? Then you do. And then finally, on top of that is understanding your risk profile. Not everybody can go and invest in direct stocks. Not everybody can go. So I think there's a whole area of knowledge and information to be passed. And unless we start young, when the brains are still reacting, we are spending so much time teaching them geography. I don't know how many people use geography in their lives at all. History, at least you can say the past helps you understand the future. But subjects like geography, which you spend so much time on, instead, if half of that can be spent on basics of financial plan, like Kailash mentioned, right? I think we'll make a huge thing. And the final point which I'd like to make here is that for us, you're saying that, Kailash, me, Swaroop are, supporting this, because there is something called enlightened self-interest. Because ultimately, if the penetration improves, all the mutual industry is going to benefit from much larger assets under management. So while it is coming from an investor education, from a social angle, the fact that ultimately it will come and benefit the industry in terms of expansion. So I think every rupee is well spent if you look at it from a longer term perspective.
Thank you, Sunil sir. Right, I think all these words which you have said is very, very important from us, from our point of view, right? And I think somewhere the industry leaders like you are giving a long-term perspective to it, right? It is very, very critical, right? When you give is when you get, right? Is something which is there. So what you are giving is by educating people in the financial literacy is what the industry is going to get, what your as a AMC industry is going to get, because they have learned it from you, right? Sundaram has supported, or HSBC has supported, or Mirai has supported. I think it comes out to it. So now I'm going to my next speaker, Mr. Swaroop, right? I think Swaroop, I see your experience over 20 years into the AMC industry alone, right? You started from from Kotak, and from there you have moved on to Franklin, to Birla, to Religare, and then Mirai, right? And you have been with Mirai for some time now, since July 2011 you have been there. So you are an industry veteran again, right? And just to get your perspective, we have got Mr. Sunil, Mr. Kailash perspective. We want to hear your perspective also in this financial literacy side. Over to you, sir.
First of all, thank you so much for having me, and it's incredible that we are speaking about financial literacy. Let me tell you, it's very tough to speak after Kailash and Sunil have spoken. Two large guys, and to come in after that is a little tough. But I'll try to pick on both sides. And I think Kailash rightfully talked about the fiduciary role that we all do. I think we would have done something good in our last birth to have got ourselves a career in fiduciary part of the business, because in every forum I ask people, what is more important, your health or your wealth? Most of them will put up their hands and say my health is more important, but in their minds the wealth is the most important, is a reality, right?
Yes.
First of all, our Indian society is such that we don't talk about wealth much. And talking about money itself is a bad word. I mean, if you go back historically. And I conclude on one thing: since we didn't have much money, it's always better to say that it's a bad thing to talk about and hide behind it. But the more you hide behind it, the more damage you do to yourself. I mean, when we look at, and when I see your program of talking to teachers, why I get a little attracted to it is, I'm born to two professors, and the reason they're sitting quite confident today post their retirement is they had started investing in mutual funds some 15 years ago, right? And the kind of compounding they have seen in their own portfolios is pretty phenomenal, because they're just buyers; they don't sell. So if somebody were to tell, and if I at the beginning of my career had been told this, and I would have invested just 500 rupees a month, I would be sitting on retirement corpus today itself. That's the power of knowing how to use your money and the importance of money in your life. I think Kailash talked about, and Sunil also talked about retirement. It is the single biggest ticking bomb in our country. When you look at the financial assets that are there in India, 55% of that money is still with banks. What financial literacy tells you is the first step is to beat inflation. I think both Sunil and Kailash talked about it. And if 55% of money is sitting in the bank, you can be rest assured that there is absolutely no cognizance of the fact that if you don't beat inflation as the first starting point of investing or saving or whatever you call it, you're actually losing money. And that's where it starts with. And when you start working, apart from earning money, you'd like to do something good. And imparting financial literacy is what is doing good from our side. And that's something which you all are doing. So all power to you. So any amount of support from our side will always be less. That's a reality, and we stand committed to this, and whatever Snehal and you want to do. Snehal and I go back 20 years out of this 27 years of working, so that's how old we go back to. And you reflected on one thing, and I agree on that. I haven't seen a more hardworking professional in our market than that, Snehal. As a male person who is regarded as physically stronger, I say I stand defeated to Snehal on her hard work or her capability of physical labor. But that's what this job requires, is to be on the street, to talk to people, talk to as many people. You talked about 100 people or a quantity. I don't think quantity is important. It's the quality of people who come in are good. If there are 5 people in the room who want to learn financial literacy, we are committed to talking to them for hours. That's not the bigger issue, right? I don't think numbers put up any or are any indication. Having said that, I think when you look at the biggest issue that is hitting our country is the lack of awareness to be financially free. But a lot has happened in India post COVID. I mean, there's this saying that there was before Christ and after Christ. I do believe that it is before COVID and after COVID. And let's look at the Indian mind. Okay, the Indian mind was, and not just Indian mind, the world over, we were shut up in our houses for 2 years, not knowing what to do, scared for life. It gave us this unique instance in life to separate our needs and wants. The biggest
Yes.
issue of financial literacy is, catering to wants, thinking that they are our needs. We saw 2 years of only catering to our needs, our life being okay. So we have come about after COVID a far more enhanced mind when it comes to financial literacy or the need of investing. Let me give you a simple data point. The industry probably has slogged for 25 years to add 2.23 crore folios. Post COVID, we added 1 crore folio in 1 year.
Wow.
That is how the minds of people changed. They were sitting in their rooms and they got this great chance of reworking their financial or income expense statement. And post that, if you've seen, they're fearless in spending, at the same time they are investing. This is data for you. And as we speak, in a market which is not giving a very clear picture of a way forward from an equity perspective, we are adding 60, 70 lakh folios per year. So the process has started, and probably this is the best time to take it 2 steps forward. I think for the young, I think the reality is not retirement. The reality is knowing how much money you will need for retirement. And trust me, as consumerism grows, as lifestyle change, the need for money for retirement is pretty large. And that can be done by very small sums of money planned and invested in the right way. If one can look at it unemotionally and plan their lives and their monies in a very systematic way, everything is achievable. There is no country in the world which is giving the opportunity of doubling the economy in the next 7-8 years. Now, the country might go from 3.5 trillion to 6.5 trillion. How do you benefit from that? The bulk of the way to benefit that growth into your own portfolio is through the capital markets. That is the way you can take it back and benefit. There is no country in the world which is giving this benefit. And if that simple understanding is there in every individual, a lot of our work is done. See, we always say, and because we are risk averse, there is this big saying that, there is a risk to investing. I say there is a risk to not investing. And at this moment, the risk to not investing is far larger than the risk to investing. Because your life is changing, your needs are changing, the amount of money required around you is changing by the day. And it all impacts your life. And if you have to survive your life, the best way is to die early, right? If you tend to, and with increased hospitalization, your lifespan is also increasing. The whole objective of life is to support your income earning years, generate income, and to support your non-income generating years. And that is what financial literacy does to you. So it is probably the most important thing to imbibe in every person's life. And I'm so happy you all are doing it. So more power to you. If you need us to work more on this, I'll be more happy in doing that. Probably the biggest need of the country right now is the importance or imbibing the importance of financial literacy in every individual. And I think one point which is being pointed out time and again, the importance of women in financial literacy is more than say the men, because finally I do not agree that women are not financially literate. They run the money in their house. If the money of the house was left to the man, no household would be running. There's this great saying by Robert Kiyosaki that the worldwide most of the budgets are run by men, and that's why we run deficit budgets. If it were run by more women, we would have probably had more surplus budgets in the world, because at home we have surplus budgets. So I don't agree women are not financially literate. They know finance, they know how to handle money. How to handle it in the capital market, something which we have to take one step forward.
I think very well point, sir. I think so happy, Swarup sir, for your perspective. Just to give you a pointer, right, of all the 200,000 teachers which we have trained, around 70% of them are women, right?
Wow.
So
wow.
140,000 women have been trained. And I see, there have been, when I speak to many of these teachers personally, one-to-one, right, most of these people, in spite of being literate, right, and in spite of being aware about this thing, they have generally their husbands or their fathers handling their money.
True.
Right?
True.
I think there is so connectivity. I think there is some connectivity issue at Munish's end. We'll wait for a minute, or I will take ahead with the question. Okay, I will not wait because I think everybody's time is very precious. Kailash, I just want to ask you one question. What are some of the misconceptions people have between investing and saving? If you can just explain, because people sometimes consider investment and saving is same.
More than investment and saving, I think the biggest misconception people have is that I've heard many people actually say that, listen, I don't have money, so I can't invest because I don't have the money. It is not a question about having money. Everybody has some money. If the money that you have today can be put in to a different asset class with a similar risk profile, and that helps you get more money at the end of the day, returns, then that is also investment. So you don't need to be rich to invest. You can just be a very simple, common middle class person who has day to day needs and has some money, which, like Sunil was talking about, putting it into bank
Right,
fixed deposits,
right,
etc. If you just move some of that money into smarter products which are available, which give you post tax returns which are better than what you were earning before, then that is also called investing. So I think people should first understand this big myth when they say that, oh, I don't have money to invest. So while it is good to say that you can start with 500 rupees, that is not the objective. The way one has to calculate how much one can save is that whatever is your income minus whatever is your expense, which is to run your day-to-day household, which is your atta, dal, chawal, sabji, electricity bill, maid servants of the house, etc., etc., minus some EMIs because most of us have some loan or the other, minus some money for entertainment. We should never sacrifice entertainment for retirement. So you should lead a good lifestyle. Whatever amount is left, that amount, 80 to 90% of that should be invested. So it's a very simple thumb rule that is there. If you're following this mechanism, then that is really what is called investing. And investing does not mean only equity. Investment could also mean moving some portion into other fixed income products wherein
right.
you get some better returns with the similar safety that is there. So these are some of the misconceptions that are always there in the market today. I also wanted to make one point, just adding to what Swaroop said, is really speaking, when people are not planning long term, it's because they don't want to think also long term. So I think this whole concept of living for today and figuring out what to do next is something which we need to educate people. And I think teachers are the best, uh, what do you say, medium, because in the Indian context, people value what teachers are saying, including the parents of the children. So when these teachers could also have this as a part of the PTA, you know, and talk to the various parents that why it is important to start young, I think this will just go a long way. And one of the things you said, Munish, at the start is uh, ability to get people into the room, because like Sunil said, it is not a pull product. I think CBSE, I should compliment them a lot that they have made this mandatory for the teachers to be a part of these training exercises. And that's
Yes.
why we see such healthy 80 plus people attending a single training program. And we just hope that not just these kind of programs at CBSE, but with other constituents also, we are able to drive in more traffic, because more the education you partake, I think the better it is going to be. And uh, one of the things people will realize when they get educated is that if you are looking long term, if you're looking at goal based investments, this is like a roller coaster ride. So it's not that it's going to go up always, it's going to have these big movements up and down. So there is going to be risk and reward. But if you have planned well, the possibility of rewards being far higher than the risks that you have taken has been the historical trend that we have seen. And with India growing at such a rapid pace, I think it's important to be invested and just not keep your money in a savings bank account.
So thankful, Kailash. Your views are always very, very important. Yes, teacher, our experience also is the same. My network got into this thing. What we have seen is there is propensity to save with everyone, especially women, right? 2,000 rupees note getting out of liquidity, right? So we are seeing a lot of 2,000 notes coming from various households now. Or the wives are, we see, keep seeing those favorite thing is wives are bringing this 2000 notes now and handing over to their husband, which husbands were not aware of earlier. So yes, women know how to save those that money. It is only putting into the right, not keeping it in their with them. It has to be in the right asset class and right place. So that is there. Sunil, I'm going to come to you now. Okay. See, you have been with. I keep seeing, your SBI experience. Because SBI keeps telling you to go to the tier 2, tier 3 rural markets, right? That is the penetration where you have the most. And I just wanted to understand, because a lot of our segment, right? We have been able to reach out to 390 plus cities in this initiative, and so it is not only we are focused on metros, we are going to tier 2, tier 3 cities and bringing teachers from you. So from an industry point of view, from a financial literacy point of view, from this the tier 2, tier 3, the rural market, what is your views? What is the penetration of mutual fund industry, and what should be done in this regard?
See, basically, we are very strong believers in this. So I have more than 90 offices across the country. So I'm covering 90 cities within India, through ANC. So for us, the key here is that, see, even penetration within urban is very low. If you look at the state-wise, I think Maharashtra tops with 20% of the people investing in equities. Gujarat follows with 10. None of the other states are anywhere close to even 5% of investment in the capital markets. So I think that the problem is across the rural-urban divide, number one. Number two is financial awareness is better in urban, lesser in rural, purely because the internet and Google and people becoming aware. But awareness is not knowledge. Awareness is just that is there. And the investment in the urban areas is driven more by greed, by the fact that you can double your money quickly, triple your money. That. So in the rural space, right, I think the key there is that first is, I think the complexity of the financial markets scares them away, right? So I think the industry needs to work towards making everything very simple, because for them, they are they're like I say, for them, land, given agrarian lifestyles, right? Land is very important to them, close to their heart. The next is the post office savings, because the post office has been their friend, philosopher, guide for so many years now, right? So the post office savings account, the post office term deposits, where they know that if they go anytime, their money is available. So for them, the safety and the security predominate. So in the financial literacy course, right, it's for us to actually encourage them that you go beyond safety and security, that you are being over safe and over secure and hence putting your future at risk. It's a very, very nuanced message, right? That you actually, while there is risk, there is reward. And I think that needs to be explained in very simple terms. And that's where financial literacy is important, because very often, people from the industry tend to think they're talking rocket science. Okay. And the big difference is to put yourself in the shoes of the listener, bring it down to his level of simplicity, familiarity, using examples which he can relate to in this, in terms of teaching risk, right? I think these are the key fundamental things we need to achieve, and that's where you need to catch them young, because once your brains form into adulthood and your ideas get fixated, then it's very hard to break that wall. Right? But in schools, you're still learning. You're still in an absorbing mode. And at that stage, when you absorb these things, they will hold you good for a lifestyle. The third point, I go back to Snail's question to Kailash in terms of the difference between saving and investing. See, generally in the rural context also, right? What is it? They have expenditure. The rural people are not the very aspirational people. They are changing now. But historically, you see, this whole EMI culture is a more an urban phenomenon, right? Buying. So the rural people save whatever they don't spend, right? But I think the fundamental thing is with them, rural becoming urban, right? They are now tending to get into buy now, pay later, EMI, getting products which are aspirational. So I think the fundamental thing to tell them is that, look, when you set aside your money first for your long-term goals, and then you spend the rest, right? And then when you put that money to work to getting those long-term goals, that is investing. Whereas when you put the opposite, when you spend all that you can and leave back, then you're left with just savings. So I think the concept for me of savings and investment is that savings is a very reactive, passive thing, whereas investment is a proactive with an end goal in mind. I think that's fundamentally something that needs to be taken into account in that. And especially in rural, smaller towns, this awareness, this thing, because today internet penetration has reached. right? It's there. They are aware of the Google and everything, but there is misinformation. You saw SEBI coming down on fin influencers who are, randomly giving advice for it, charging people, leading them down the wrong path. So even for them to stay away from the bad influence of these influencers and the likes, right? Properly educating them, right, is important. And the final point is that I think when you say financial literacy, I think that this is actually life planning, right? It's not just about money. It's not about finance. It's the way you think about your life, the way you think that there are uncertainties. How do I counter them? You meet non-financial uncertainties in your life, but you tell them this whole thing about planning for an uncertain future using money. In our case, it will spill over to them in how they handle their life itself in terms of dealing with the uncertainties of life, which are not money related. So I think the importance of financial literacy starting young is far more important for them to handle their lives better and cope with the changes that they will face in their life. The old days of you joining State Bank and retiring from State Bank are gone. This is a new uncertain world, right? So I think that's where the criticality in the rural areas, which you pointed out, is simplicity, perspective of our life around it, because it won't register with them otherwise, and then teaching them about the inflation as a long-term pattern. I think Swaroop and Kailash both refer to it. But people are still not aware of that. People don't think that, oh, my retirement corpus should probably be 25 crores if I'm going to live for 60 years more, right? They won't think in those large numbers. So I think that getting them that familiarity of how big a demon, how big a Ravan is inflation in a longer term time frame, that needs to be brought down to them. I think that's also an important thing that we need to do.
Thank you very much, sir. I think that's a very, very good insights. Just for everyone, sir, there are a lot of students over here, also a lot of, as I say, industry stakeholders. There are people from government side also, right? There are people from Skilling Universe. There are people from corporates and startups who are here. They are our clients. They also wanted to understand and listen. So I think there are many people. So, Rup sir, I'm going to come to you. Thank you, Sunil sir, for this. See, I'm just putting two questions in one, right, because of the paucity of time. And I'm just putting there. One is, we see small is big, right? That is there. So 500 rupees SIP is the minimum which is there, right? What we have seen when you need penetration, when HUL wanted to penetrate, so they came out with chota packets, sachet. They started with this thing. So do you think 500 rupees SIP is adequate, or what is that? Because the power of SIP is being told by the industry, and I think starting young is my second question, which I'm into it. If I start an SIP, I am a young person, and I might start a year, because it is not, we have to plan for our retirement, right? Now, not plan after retirement, it is plan for retirement, right?
True.
So I think that's a very vertical, very important point. So for all those people over here, just wanted to understand your views on, starting early and, small is big.
See, I think first of all, especially in the Indian capital markets, never wise to underestimate any amount of money.
Yeah.
That's one point of time, one point of the discussion. Having said that, everybody's life is different, and everybody's life goals, life needs are different, and there is nothing wrong or right about this life goal. Sometimes if I were to put down my life goals and my life requirements, you might laugh at me. Ki, boss, ye kisi ka zarurat hota hai kya? But that is my life. I decide what I want to do with my life. The beauty of financial planning is marrying your investment to your life needs, right? That is what we call goal planning, or we call financial planning. The difference between saving and investment is when you add a purpose to saving, it becomes an investment. You do everything with a goal, especially, when you look at investing, wealth creation. How much is that wealth? Right? You have to define it. And once you know how much you want, how to invest and where to invest becomes easy. 9 out of 10 times we have encountered people don't know how much they want. Now, it is not about 500 rupees. Now, if you know how much you want, then you will know how much to invest. Now, for the sake of investing, you might invest 500. Like for me, if I would have now I regret saying that, "Arey, aur thoda zyada invest kar leta to better hota." But if you reverse the thing and you put a goal, and sometimes the goals can be moving post. But if you put a goal and you then assess your journey to the goal, and if it is moving, you can still take corrective action. So I would not say 500 rupees. Half the times, people have a lot of money, but just because somebody is asking for 500 rupees, they put 500 rupees.
Yes.
That's not how it should be. I mean, you have to first ask yourself this most important question: why? Once you have an answer to the why, how much and where are not the bigger issue. 9 out of 10 times we spend time on how much and where. That is actually not significant at all. What is most significant is what matters to you, and what matters to you is that why. Answer that why, you will know whether it is 500 or 1000 or 2000 or 10,000. Sometimes your why will tell you that the amount of money you have is not viable for that why to happen. Then you have to find other ways of adding money and probably increase your income to reach there, if that is what you want. So it is never about 500 or 1000. It is about what your goal is. Once you know your goal, then working backwards is the right way.
Okay. Thank you very much, sir. Now, Kailash, I'm going to come to you for my last question with you. Right? You have supported us, and you have experienced this whole initiative of financial literacy for teachers, and we have touched base around 200,000 till now. We in CBSE alone there are around 1 million teachers with them, so 800,000 teachers which are required in CBSE only to be trained. And uh, if I when I speak to the CBSE director, he keeps telling you, Munish, this has been a very good experience with them. The teachers have been finding it very relevant. So now they want to take it to the state board teachers also. So how do we scale it up? What has been your experience, Kailash, on this with us?
So obviously the experience has been very good. I think there's no need to repeat that because we've said that. I think what is important is there are three stakeholders in this whole partnership. Okay.
Yes.
One is the asset management companies, all of us. Yeah. So second is Jeevitam. But third and the most important constituent is a CBSE or tomorrow the state boards or day after an ICSE board or whoever is the party who's willing to give their employees stroke partners or whoever some amount of financial planning. If the three of them do not work together, then I think we kind of start failing. The reason for the success right now is because CBSE has put its might and soul behind this initiative, ensured that the teachers attend these training sessions. So you get a large audience. You all have enabled the use of technology and scale to ensure that what we could deliver just about 50 programs in a month, you can do 500 programs or 1,000 programs in a month today. So
Yes.
that's the contribution with Jeevitam. And third is from an asset management company side, our ability to work with the right training partners to impart this knowledge across so many places across the length and breadth of the country. So if we want to scale this up to the next level, I think it becomes extremely crucial that all three partnerships have to work together. If even one of the three, there is a little bit of disconnect, I don't think this will be successful. So in future, that is what I think the focus has to be. But before, I just want to shift the topic a little bit. Uh, Whenever we talk of investment, savings, etc., we talk of long term. And I believe that one should always give a concrete example. And the best and concrete example I always believe is when it comes from your own house. So I just want to take this because it is very, very critical. So in 1998, one of my friends, or rather that time not a friend, but somebody from the industry, literally forced me to invest 10,000 rupees in a particular scheme. And at that time, I just bought a new house, so liquidity was tight, but I invested that money. And being a typical Bombay person, uh, I did not, and those days there was no email ID, phone number, PAN number, blah, blah, blah to be input into the system. So I then changed that house, went to another house, went to a third house. I completely forgot about this investment till 2012, which is nearly 14 years later. That 10,000 rupees today, Munish, despite numerous fund manager changes, despite the product itself undergoing a change during these 24 years that I have been invested in this product, is now worth about 6 lakh rupees. Okay. And let me tell you why I got that return. I got that return is because for the first 14 years, I had forgotten about that investment. And when I saw it then, what is the return? I realized that this is the scheme which has taught me the most in terms of discipline. That when we talk of long term, we do get swayed by market conditions. But because I had forgotten about it, I actually made the most amount of money on this one product. So, here they say that if you are a Kumbhakaran after investing, you are the most successful person. And I think that's the message this goes by. And this is a scheme. And I narrate this incident because despite being in the industry for so many years, if it can happen to me, for other people, it's a very common thing that they can get swayed. So staying invested, but at the same time monitoring and measuring your portfolio, not taking rash decisions, also helps bring financial investment that you have planned out for.
Thank you. I think that is very, very important, right? Your 10,000 becoming 6 lakhs is a lot of people have to forget. We have many such examples. Uh, Mr. Sunil, I keep hearing, my last question to you also is, Sunil sir, we keep hearing about, like 500 rupees SIP become making you, and if you start young and you are invested when your kid was born and after he turns 40, and if you have invested 1,000 rupees or any of those things, you the people are not able to even put the number of zeros you get after 30 years or 40 years, right? Now see, the mutual fund is a great vehicle to invest. The only problem is people are not self aware, right? If we make them aware, the simplicity, the convenience, how do we make these people aware? How do we scale it up, right? After so many years in the industry, the penetration we always talk about, because I keep coming to you, these tier 2, tier 3 cities, right? How do we increase the penetration and scale this up?
See, I think that it has become a bought product. As long as it's a push product, right, you will always have resistance, right? And I would draw the attention to hammam soap and a Lux soap, right?
Okay.
If you look at it now, everybody, a middle class person will buy hammam soap because he sees the value of it. Said cleaning karna hai mujhe, and this is it, and he buys it for the cleaning purposes. But you go to the very poor people in the jhopadis who live there, you'll find those ladies are buying Lux soap for that thing because it's a bought product. Because Lux, through its advertising, through its image, is telling them that I'm good enough for that. Right? So the power of that, a middle class person who sees value for money goes for that value product, but a poor person is able to go and buy. So the concept is ultimately, let's face it, you are selling a dream, right? But the dream has to be bought by the people, often envision the future, which is rosy. So I think the power of 2, 3 things. One is vernacular language. People relate only in vernacular language. Second is the visual media. People remember far more what they've seen and heard than what they have read and listened to, right? In that context. So I think the usage of that kind of allegory. Third is the usage of examples which are not just about money, money, money. Because while money is a left brain thing, right? It's about calculating returns, this, that, right? Emotional is the investment driver. Right? So you have to appeal to the emotions and not just give facts, figures, numbers saying 500 ka itna banega. You have to put the dream in there. And this has to be contextualized to that person. There's no point in talking about, let's say, a Mercedes Benz to somebody sitting in a rural city, right? So the contextualization, what does he aspire to be, which is where I draw my Lux example, and say that this is a means to achieve that aspiration. You have to appeal to the right brain of people, and people remember. That's why, historically, the Indian Vedas and the Vedic scriptures are all Shruti. They have been passed on through verbal hearing the sound, the intonation. It's not the written script. And that you remember, and that's how you have all these scholars who are able to, reel off. So I think that the messaging, the way we do that, right? I don't know, these training programs, are they still putting up graphs and pie charts and showing this, whereas you've got to use examples and hatke say. You have to take them out of their context. People relate to that, only that, and then only they'll remember it. And the other thing is also is that at these sessions, right, the best way that somebody learns is by teaching.
Yes.
So when you're teaching the teachers, there should be a component of the sessions where one teacher takes up and tells the other teachers, right?
Okay.
When they teach is when they learn. So I think
Role
that,
models.
in a group study, you would have understood, right? Each one of the group study picks up a chapter, and that guy will become thorough in the chapter because he's forced to explain it to 5 other fellow students. So to me, an integral part of the training in these places has to be to make them to verbalize and express. Do role model play, because those actions, those things are what leave a lasting memory. Otherwise, you go like a training program to a classroom, how much do you remember 2 months later from what you taught in the classroom? So I think that the mechanics of communicating these, I think, are very, very important. And we tend to get lost in the figures and the facts and say 500 rupees for 40 years will make you a lakpati or a crorepati, Those are all, people look at it and they just goes way above their heads, So getting it more down to earth, simplicity, and using visual allegory in the storytelling process, I think are absolutely critical if you're going to make this capital markets a bought product and not a sold product. I think that's the key.
I think aspirational, becoming role models, and becoming a bot model, I think these are very, very important concepts which are there. Swarup sir, I'm coming to the last question to you, right? Then I will leave it out to everyone for this thing. I'm going to extend it by 5-10 minutes because I have a lot of questions coming to me from these people, but I want to still ask this question to you. See, Jeevitam is a platform which is looking at vulnerable segments, right? Wherein women is very, very important part. College students, right, coming out from tier 2, tier 3 cities. There are many college students from various colleges across the country who are here today, right? So we call them vulnerable segments, right? And the scale is huge, sir, in India, right? Scale is huge. The number of people investing in the banking universe also, like leave aside the mutual fund universe, the banking, there are many people who are still unbanked, right? And what we have seen is their aspiration is no less than anyone, right?
And why should it be?
Yeah. So why should it be? They have to get their students, their children married. They have to get their children. When I meet so many street vendors, they want their kids to go to the best of schools and get best of education. So their aspirations are no less than anyone, right? Okay, and they are still not there. How do, as an industry as a whole, right? It is very, very important for us to that, your 3 CEOs are here today. You are the thought leaders. You are the people, right, who are, helping the industry grow. How do we get everyone together to this financial literacy mission and scale it up? Snehal keeps telling me, sir, people have to understand this is a problem of scale. How do we get this problem of scale going? There is so much to be done, right? So Snehal keeps putting me this into my head. So I said, let me get your perspective also, right? And take it to the next level, sir.
See, I think, forgive me for saying whatever I'll say in the next 2-3 minutes, is that I think, see, if we put some products on the table and it's a 26, 27-year-old history of delivery and returns for everybody to see, it is up to all of us collectively to sit down and realize that if we put such a great product on the table, why aren't people buying?
Yeah.
That's something which all of us have to reflect, right?
Yes.
It's a phenomenal product, okay? And the track record over 26, 27 years is there for everybody to see. But after 26, 27 years, if we are having a discussion which we should be having in the first 3-4 years, I think there is a lot to reflect amongst all of us. I think one thing is very important for all of us to understand, and from a country's perspective, while it's great to get lost in the noise that we are this, we are that, we'll be the 3rd largest economy and all that, we are essentially a poor country, right? Where bulk of the people are fighting for their survival.
Yes.
You talked about aspiration. Let me give you a very interesting example. And this is an example which comes from my home state. I'm in Mumbai or anywhere in the country. If you talk to the bulk of the plumbing specialists that come to your house, if they are not Odias, no, don't get your plumbing done.
Okay.
It's my personal opinion. I'm just on the lighter side. We specialize in that. But let me tell you, none of the kids of these plumbers will be a plumber.
Yes.
Just to answer. And they are earning money, and this is the first generation which has come out of an extremely poor state, okay, which is working very hard in large cities, sending back money to educate their kids, right? That is the stage that we are in. And we as a country now, now cross that psychological threshold of $2,000 per capita. And every country you go back to changes after $2,000 of per capita. In India, it will be a little different because our denominator of population is a little high. The amount of people that the country feeds, which are non-earners, is substantially higher than the rest of the world. So fundamentally, it's wrong to compare us to the rest of the world is a reality. But lot will change as we take this journey from 2000 to 4000. What used to be a struggle to survival will now get into some amount of surplus in everybody's life. The life that my father led and the life which I lead and the life which my son will lead, economically, knowledge-wise, and ability to invest in on a different risk zone will be totally different is a reality. Now, when you look at the data of my son's age and reflect on this simple demography that population under 30 of the world, 60% resides in India, the investing population that will happen in the next 5-10 years will be dramatically different or may not have any correlation to what has happened in the last 25-26 years is a threshold of where we stand. Now, coming to the basic fact that why have people not understood us, my personal opinion, it's a purely personal opinion, I'm not reflecting on anything else, is that our language could be very different.
Okay.
Our language has to be a language which the other person understands. While the other person understands simple interest, we talk CAGR. Nobody understands CAGR and nobody is interested in understanding CAGR. So as we go about imparting our knowledge or the essence of financial literacy, it's very important to also think about it from their point of view, then us going and sort of giving our knowledge in the way we think it is right. Right, that is most important, and I'm very happy to say that the industry started going beyond English. Why should somebody sitting in the in-depth of Odisha think of hearing me in English? Right, I'm just giving an example. I mean, Sunil and I have done enough investor education sessions together. He's an excellent speaker. When he and I did something in Bhubaneswar, I said, "You are a great speaker, but I'll speak in Odia." It happens like that. But we have to go beyond the way we were talking to a language which everybody will understand, and that's probably step one.
Yes.
And the need for investing will only grow because the aspirations are growing. If we can marry the two, things can happen very quickly. And like at the beginning of the discussion, there was the discussion of the mobile phone. Reaching people is very easy now, right? Penetrating our thoughts and reaching out to people is no longer an issue. And post Geo, we have seen the penetration of the mobile phone in the country. So the inputs are there, the environment is there. It's just a matter of time if we get our act right. And again, emphasizing on the simple fact that the language has to be a language which they understand, not a language where we want to show off that we have knowledge. If we can break that down, a lot is possible. And I feel if we talk about the same subject 5 years later, we would have seen a very different sort of environment. I think one big thing which we have to acknowledge is from our side, this great regulation of committing some money of our own TER or expense ratio towards investor education has changed a lot of things. Right? And that will only grow from here on is my personal opinion.
Thank you, Sarup sir, and thank you everyone. I'm getting a lot of questions. Snehal keeps sending me messages that yes, there are questions. I think we have done away with our time. Snehal, you want some questions to be put in, or we conclude the session? What do
Just
you want?
one or two questions, sir. Only one or two questions because there are many, but we can ask one or two.
So, is there anyone who wants to ask question?
Munish, why don't you take one or two questions and
Yes. Yeah.
rather than ask
No,
others?
no, there are one or two questions.
You could choose and share it
Kasha,
with us.
yeah. Can we be fast, Kasha?
Yeah, what is the importance of investing for a secure financial future? Is the question which has come from one of the spectators.
Anyone can take it. This question, sir.
What is the importance of investing for a secure financial future?
Sunil, sir.
Well, the answer to that is that secure financial future, the problem with people is that we keep changing the goalposts. When I start my life, I think if I become a crorepati, by the time you're 30s, you want 5 crores. By the time you're in 40s, you want 25 crores. So to anchor yourself to what is secure. See, because in a world full of uncertainty, right? How do you say secure, right? You can't put your number and say, "Main crorepati banunga, so I'm secure," right? The world is changing. So the point is that when you then look at it from that perspective, right? Security comes from meeting volatility with a product which can benefit from volatility, right? So the biggest volatility created in your life is one is the uncertainty of the world, which is the VUCA world we live in, but more importantly, inflation. So I think if you look at your asset classes that you choose and you choose the right, because when you choose a fixed rate of return, the one thing is guaranteed, it's not going to meet volatility because it's fixed. It's a basic, simple understanding. So no fixed rate instrument can give you a counter because you don't know what the future rates of inflation will be, what are the future uncertainty the world is going to be. So you've got to be then in an asset class which takes on the volatility to deliver. And then volatility to volatility you can match. So in my view, the capital markets, partly through the debt capital markets, partly through the equity capital markets, are essentially because there is expertise and diversification. When you give money to a professionally paid fund manager, right, whether it's an asset management company, an insurance company, or whoever, his job is to use his knowledge and expertise to pick and then use diversification, which is a basic function of the capital markets, to minimize the risk without giving up the reward. That is the whole purpose. So I think that for a secure financial future, right, you set yourself goals at reasonable intervals. You have a right to revisit those goals. But at those, when you revisit the goals, you make the proper asset allocation so that the amount of volatility, the amount of your goals, how far they are being to reach, you choose the proportion of that asset class. Like equities come with high risk, high reward. Fixed income capital comes with lower risk, lower reward. Fixed deposits come with, I would argue, that no risk but no reward at all because they're not going to beat inflation. So choose asset allocation is the right answer with goal planning. So these are the two things which can give you a secure financial future as I define it.
Thank you, sir. And the last question I take is, how can I start investing if I have limited knowledge or experience in financial matters? I'll just repeat the question in interest of all. How can I start investing if I have limited knowledge or experience in financial matters? Kailash, Swaroop, anybody can take
So
this.
I can take it and then Swaroop can add. So just one important thing is there's a lot you can read up today online. You can consult good distribution partners. Uh, Two important questions to ask any distribution partner because you may not know them well and you want to understand. First question you should ask them is what is the risk in the product? It is very important that the person tells you about the risk. He shouldn't be talking about the returns first. First, understand the risk in the product. Every product has a risk. So even a bank fixed deposit has some risk. So let's not believe that bank fixed deposit don't have any risk. So ask the question to the distributor or the advisor, what is the risk in the product? And the second question is ask the person to explain to you clearly what are the charges that you will end up paying when you invest in the product. because there are people who try to sell you products without giving you all the charges, and that becomes very dangerous. So if you have invested 100 rupees, is the entire 100 rupees going into the investment, or is it 98 rupees going into the investment and 2 rupees going into various administrative charges, or is it only 88 rupees going into investment and 12 rupees going into administrative charges? Now, different kinds of products, and I'm not talking of mutual funds, I'm talking of all kinds of financial products, they have different charges. So identify the risk, identify the fees that you end up paying, and then you can discuss with the distributor long term how are you going to set out about your goals. Swarup, if you want to add anything on this.
No, I completely agree with what you're saying, Kailash. The only thing I'd like to add is I think as investors, we want to know what is most important for our own lives, because what is most important for our life is only known to us. Get that part very clear, and what you want to expect from investing is something which only you know. And that is something which you have to get very clear about from yourself. I think Sunil talked about shifting posts. I think you will know that whether you'll shift a post or not only when you know what you want, right? Before you go to an advisor or you start thinking or reading about products, and I will echo exactly what Kailash said, is that you think this is a return generating process, is actually a risk mitigation process. Understand how much risk you can take, and it's a journey. When I started investing in my early 20s, my risk taking ability and my risk taking ability now are very different, and nobody knows the risk ability better than your own self. So marry the two, and if you don't know how to invest, go to an advisor. That's the right way. But put a proper plan to it, and as we often say, also fix up a review plan to that. And it's a very simple process. There's no rocket science in it. Keep it as simple as possible, and marry it to your own life, as simple as that.
See, very often, just to add to Sarup's point, very often people will ask you to do a KYC, right? That's the know your customer. But it's important to do a KYS. That is what Sarup is saying. Know yourself before you go and fill out a know your customer form.
So rightfully said, sir. Thank you, sir. Thank you, Mr. Sunil. Thank you, Mr. Swarup, and thank you, Kailash, for sparing time and coming to this beginning which we have made on Digital and Financial Literacy Summit. Uh, with the response which we have received, overwhelming response. There have been participants. There are many questions. We'll take it. We'll send it across to you, these questions, sir, because of the paucity of time. But I am firm believer, sir, that this mission is really a mission, and we need to go with the mission mode. And the scale which Snehal keeps talking, that is the number which we should have. We should have more people being part of the mutual fund industry. We should have more people putting money with the mutual fund industry, and financial literacy being the starting point with everyone. So thank you, Mr. Kailash, thank you, Mr. Swarup, and thank you, Mr. Sunil, for being in this thing. Thank you very
All
much.
the very best.
Thank you.
Thank you so much for having us. Such a pleasure.
Thank you.
Thank you, Snehal. Bye.
So now we are going to start with our next session, which is with the digital literacy session, wherein we have our esteemed speaker Girija, who is going to be there. Here is Girija there?
Yes, Girija is already there.
Yeah, hi Girija.
Hey Munish, how are you, sir? It's been a long time.
Very much welcome to you, ma'am. Ma'am, for everyone with us, we are extremely honored and extremely happy to have Girija Mukund ma'am with us today for our panel discussion on digital literacy. Just to let everyone know, Girija is Director CSR and ESG with Kyndryl. And Kyndryl, we have received a mandate from Kyndryl to train around 100,000 Anganwadi workers in the next 3 years, right? That is a starting point which we have received. I call it a starting point from Girija. Just to give a brief overview of Girija. Girija Mukund, she is the CSR and ESG leader. She is responsible for pioneering and implementing Kindle's CSR strategy in India. Before joining Kindle, she was leading the CSR and corporate compliance verticals at Global Foundries. During her tenure at Global Foundries, she was instrumental in setting up and scaling the CSR, ethics, compliance, and corporate secretarial function, supports the board on compliance and policy matters. She has pioneered programs in women empowerment, healthcare, skilling, climate action, and education. Earlier in her career, she was working with major global organizations like AMD, Intel, and Motorola in diverse roles. She holds a master's degree in social work, post graduation in business administration, and is certified project management professional from Project Management Institute. So, very warm welcome to you, Girja. Really, very illustrious experience, and we are very happy to have you as our first guest on this very important topic of digital literacy for women. I think this is one topic which is very close to our heart, to your heart. And with us, I have equally passionate person and very experienced person, Snehal, who is there with me. Okay, Snehal, for everyone again, she is a industry veteran. She has been into the financial and services industry for over 3 decades. She is leading the financial and digital literacy mission within Jeevitam. She is very passionate, equally, as Girja, you are about the financial literacy and especially among the women, right? So we have got two passionate people today to talk about digital and financial literacy about the woman side. So I'm going to leave the floor open to you, Snehal and Girja. Thank you again.
Thank you so
Thank
much,
you.
Monish, for having me here. And I would like to thank Jeevitam for inviting me for this insightful session. I heard, the financial segment leaders, Mr. Ramesh, Mr. Sunil, Mr. Swaroop, and Mr. Kailash Kulkarni, some great insights from the leaders here. Um, so over to you, Snehal. Thank you so much again for having me here.
Thank you so much, Girija. I mean, your introduction itself is so encouraging, honestly, and your experience and your qualifications. That's really nice. When Biren has initially sent me your profile, I was just reading again and again and again and again that such a qualities, diversified qualities, and what kind of roles you have performed in your earlier organizations and the current organization also, what you're doing. Hats off to you. Tell me one thing. I mean, I feel, I initially, when I joined, I said, oh, I'm here with 30 years of experience, but still I feel I'm not fully financially literate. So what about other women, in India? Do you feel that, why women are not so financially literate, why they are behind? And not only financially behind, I mean, literacy wise, but even digital literacy wise, are women behind, or in digital literacy they are little ahead than the financial literacy? What's your opinion?
So I second your thought on financially literate. So to be honest, I'm not completely financially literate even today, despite having worked in different diverse roles, especially being part of the finance organization for a few years in my earlier career. And so what I would say is, even today we are kind of that skepticism, I would say, and is there and I would say we are very risk averse, right? We talked, Swaroop and many of them talked about being risk averse. So women are risk averse, and if I look at I'll relate to my own story. So my very first job, right, my manager came and told me, hey, see, you have to invest in equity. This is about two decades plus ago. And he said, you have to invest in equity. I said, I'm okay to invest. I'll check with my father. But if I lose that money, would you be able to, repay that to me? That was my question. He said, what kind of a question are you asking? I'm asking you to invest so that you get more money. But I said, I'm risk aware and averse. And my father very clearly had told me, you can invest in these 4 or 5 portfolios. Could be a ppf, or could be a recurring deposit, or could be a FD. And here this manager of mine comes and says, so you invest in equity. Then I went back to my dad, checked, and he said, give it a shot. It's a small amount. You're not going to lose anything big. Even if you lose, it's okay. You can always earn that money. So give it a shot. And that was my very first investment, I would say, in equities. And of course, the funds tripled or grew much larger than I thought. And of course, I was very happy about it. But despite that, for many years, I didn't, I would say, take that chance of again reinvesting in equity. And comes the mutual fund later, right? Mutual fund again, I'm just giving my own example where, yes, I invested and was able to see some good returns. And very recently, I would say from the last probably a decade, I was looking at investing in equity market. Again, I go back to my spouse, my friends, double check, triple check, before we do. So I would say women, when it comes to investment, they are very strong. They make sure that they invest in a balanced portfolio. It's not that they don't want to invest. They invest, but as I said, they are risk averse. And the same even with the rural population, right? It's not just us who are working in corporates. Even with the rural population, they are very risk averse. So I have my saving. With great difficulty, I managed to save some money out of the household expenses, right? And that is for saved for some kind of a crisis. And I definitely would not like to let go of that money by investing in some, I would say, a capital market or in some mutual fund, for example. That becomes my last priority. Or if I have some excess, then probably I would look at investing that in some kind of fund or an instrument. So that has been traditionally imbibed into all of us, and probably it's continuing, but definitely things are changing. And I did read some statistics about Mayor, which says, some studies said only 25% of 27% of women make financial decisions
Yes, yes.
on their own. And even of that 27%, it's only 60% of them. And the 60% of them are still looking at traditional investments, could be your FDs or the NPAF, sorry,
Post office,
the post office or
yeah.
your NPS or whatever, right? And only about 19% still go back to their friends or their spouse or family members to check, is it worth investing in a product. So
Right.
as an individual, if you ask me, I have to take that decision today. Yes, I am taking those decisions, but still not ready to take the larger risk,
Understood. Understood.
right? Snehal, I would like to get your experience and insight, being from the financial segment. What are some of the things that you have observed?
See, I have observed one is that women invest very unorganized manner. Though they are very organized homemakers and they run the home budget, but when it comes to, at least earlier, women were little organized in terms of they used to keep money in burneys. So actually, the value of money used to reduce that, in that sense, because inflation used to go up. But they have never left that investment to invest in burneys. Now somewhere they are coming out of that, from burneys to FDs, fixed deposit, from fixed deposits to postal savings, and from postal savings to mutual fund is a long journey for a woman from unorganized to organized way, which has started happening now slowly. But I think it is long way to go, that woman has to understand that they have to come out of, investing in a cupboard, investing in burneys, investing in somewhere which will not actually increase the value of money, which will keep money as is. And actually, if inflation hits it, then obviously the value of money is going to go down. They have to realize this very fast. And this is my major observation, I can tell you know. But tell me one thing. I mean, financially, women are growing now in terms of making the investment, or growing from saving to do the investments. Okay. What about digitally? How digitally you feel women are getting efficient? Because you are into that sector and you observe it very closely.
Yeah, so digital literacy and financial literacy, I would say, kind of go hand in hand, right? So if we are talking about financial literacy being a life skill, and I remember Mr. Ramesh Kailasham had mentioned about it, it should be a life skill, right? Same goes with, I would say, the digital literacy also, because today it's kind of become our identity, I would say, in the modern world. And every one has to be digitally literate to even manage our own financial transactions, right? Everything is online today, everything has gone digital. So digital literacy, I would say, is kind of a backbone for us to start the first step. And next comes our financial literacy, or go, I would say both go hand in hand in parallel, right? And these both are part of life skills today. And that is something each and every individual should be equipped with, or should be digitally and financially literate. Or I would rather say we should have a digital and financially inclusivity or inclusive environment in the country.
Okay. Tell me one thing. I mean, we are just talking about the traditional methods of investing. Hence, I'm asking you this question. Women invest more in gold, in bank deposits, in post office. I mean, it's kind of a safe assets, you know. So, what's your advice of doing asset allocation better? Because see, you have yourself started your journey from safe to equity, and I'm sure you must have invested in direct stocks probably at that time, not mutual funds. So your experience was good. So what you will tell other women to start with what kind of investments? Because majority of the women still invest only into the safer assets.
Absolutely. And I would say, see, it's better to diversify your portfolio, right? Gold is something close to heart for everybody, for all women. I would say most of them. So that investment in gold, which used to, see, if I had invested in gold, let's say 10 years ago, I can see a good rate of return today. But today, if I'm going to invest in gold, it's not going to really give me a big rate of return, let's say 5 years down the line, or it may give. We don't know. Everything is inflation based today, so you really don't know about that. I would say diversification is very important. Mutual fund is something, or your even your equity market, right? When you look at it, yes, when you see especially your mutual fund, and if you're doing an SIP, for example, your fund keeps going up and down, so you have to kind of close your eyes for some time when the market is down, and don't get really bogged down
Bogged
about
down.
those things, right? And you know that it's going to definitely pick up. So it all depends on how safe your investment is, which are how you kind of, I would say, pick those funds that can give you the good rate of return. And this is something that your fund manager or your close aide should be able to advise you. And I'm not saying, I'm not only talking about mutual fund here, any kind of SIP, right? For example, see, FD is also today, as Mr. I think Sunil pointed out,
Yes, you can
it's
use
not,
as a SIP.
yeah, it's not actually very safe to have all your money in
Absolutely.
all your eggs in one basket, right? It's always good to have some probably in your PPF, some in your, let's say, NPS, or some in mutual funds, or some in equity. If you're able to kind of spread your investment, definitely you can plan your retirement well. Something I would say, so that you stand on your feet, you're very financially independent, and you don't have to really depend on anyone for any kind of financial support. So
Yes,
diversification is
that's
the
right.
key. And
Absolutely.
and you know, for even for a person like me, if somebody has to come and explain a product, it has to be in simple terms. And as I think Mr. Swarup pointed out, local language, a vernacular language is so
Yeah, yeah.
important for you to really go and convince someone, right? Now, if I have to
Yes.
go sell my product, I should have my own community member who has invested in a product and who has seen the returns, and who can kind of share that compelling story for
Yeah,
me to really encourage others to invest in the product, right? That
absolutely.
is so
Absolutely.
important. And if we are able to get that kind of
Right.
build an environment, that kind of an environment, and share those stories, I know for sure that you can get more people to participate in all these investment opportunities that's available currently for
Sure.
everyone.
So tell me, you know, I mean, all this is fine, but what happens, how you can actually motivate? I mean, see, you may have your colleagues around you, you may have your friends, you may have your relatives, and we as a woman, we chit chat a lot, right? And we chit chat on different topics. It's just not just household, but I think we talk on many including fashion, including entertainment, and we talk silently also on investments also. What do you feel that how you should motivate? Do you feel that even you, or you must have motivated in the past also? I don't know. So I want to share. I want you to share your experience. That have you motivated some females for on investment, or would you like to motivate? In that case, what tool you will use to motivate women to invest?
See, most of the time it is this informal, groups that you have, or in your own set of community that you have, is the one is your starting point, right? Awareness. How do you create that awareness within your own community, your own siblings, your own relatives, your own close friends, your own network? How do you create that awareness? So it is simple, like, hey, see, simple thing like I go tell them I invested in this product. There's something new that's come. I've taken a small risk in investing in this product, but this is the rate of return I'm seeing in the last, let's say, 6 months or a 1 year. And why don't you look at this? This can be a good starting point for you to probably plan your retirement, because you know that we don't have social security in India, and that is something that we need to start, creating that wealth and make sure that you kind of have your own financial security. So this is purely will be through, I would say, mostly your informal discussions in your own network, in your own group. That's how you start motivating people to invest. Now, if I go, let's say, for example, today to Haryana and try to, organize a motivating speech on financial literacy, nobody
That's
will
very
turn up.
nice.
No one will turn up, because
Oh, is
unless
it?
their own community member comes and talks to them, shares their own example, it's going to be very difficult to convince someone to see that. That's the
Okay.
reality, right? Even for me, if my own manager comes, or if my own family member comes and says that it has to be done, or if my own community member comes and says that this is what I have done, and he shares his or her story, then I would be more convinced to invest, right? Rather than I, as a third party, going there and giving a speech or talk about financial literacy. They would say, yeah, these are great ideas, but am I willing to shell out this hard-earned money that I've saved for last 5 years? Do I really want to invest? Because there's that small element of risk involved there, right?
Understood.
So that is crucial. So start within your own community, and then your own network, and then spread awareness within the larger group. Definitely is going to help. And sharing those compelling stories and showing your own growth, right? Show your own graph, how you have grown by investing. So here I think one of the key speakers spoke about investing 10,000 and how that had grown to 6 lakh. He had forgotten about that money. So those are some things that you need to kind of show and talk to people, show the proof of your investment and the return. Then definitely we can see a lot more participation in the equity or your other markets.
So sometime I feel, we are talking to friends, but we are not talking to family. It
Absolutely.
happens. So do you feel that the entire family can be financial literate if a woman in the family is financially literate? Will it make
Absolutely,
difference?
right? Absolutely. And Jeevitam has shown that by training the teachers. And look at the cascading effect that it's going to have on the generations to come. And if that's going to be part of the curriculum, you're pretty much, training everyone, the next generation across the country. And same thing goes with the house, right? As I feel more empowered when I'm financially literate, and that's the kind of cascading effect that will have when I'm teaching my children, or when I'm going to, kind of create that awareness within the family circle, right? So it definitely has a huge cascading effect. And that's something very important, that every woman, every lady should be financially literate. And as I said, it has to be, as Mr. Ramesh said, it has to be a life skill that everyone should be taught.
True, true. But many times, due to lack of time, earning women don't invest. They just keep money as is. And even homemaker doesn't invest because she is not aware. What's your advice for them? I mean, they take out time for various activities, but do you feel that they need to take out time for this? Because otherwise, I mean, their future is uncertain as a homemaker if they don't understand the finance, right? And especially the investment. So, what's your view? What's your guidance to the homemakers typically, as well as the working women who are not taking out time for investment?
See, what happens is for
Finally,
us,
you have taken out time for investment and you have started your investment and you're looking into your investment, right? So how can you guide the other women here in the forum and in general?
see, taking time out for investment is very, very crucial. What happens is sometimes this takes a backseat because your father or your spouse or somebody is taking care of your investment, and you're really not focusing on that. And only when see a situation like COVID has had kind of taught some life lessons for all of us, and it's kind of, I would say, a reset button for most of them. Going back to see what are the investments we have, how do we save. Many of them won't have even kind of filled in their nomination form, for example. And the families probably would have struggled. Even the men would have done that many cases. And for women, especially for homemakers, it's very important that they get involved in the entire financial matter, right, or in the entire financial investment portfolio. And that is where I would say it's mutual. The men have to start creating that environment, right? Today, in many households, what happens is, especially a homemaker, she's given certain X amount and she's been asked to manage the household expenses. And she's not aware of what is happening beyond that. And she doesn't have any view of what is happening beyond that money that she has got to take care of the household expenses. That is where men play a crucial role in making them aware of what are some of the investments that they have, and how the lady of the house can start supporting them. This is when it comes to especially women who are homemakers, right? It's so crucial. And that financial literacy, like Munish said, right, his wife talked about getting a training on financial literacy. So that should happen in every household. Every lady of the house should undergo that training. At least start with basics, something simple that they can understand, and then start taking to the next step, right? So whatever little money that I've kept, let's say in the kitchen or in some of the boxes, that's a typical household thing, right? That gets into investment and not staying there, lying there unutilized, right? So like one of the uh, person whom I know very well, one of a very renowned person, he said, you should make the money work for you. You should make your money work for you. Don't allow it to sit idle in your account, right? So that's so crucial. And that is something, a lesson that all of us, I would say, uh,
Great.
should take it back with us, make the money work for you, right? So
Yeah.
that's so crucial. And same with the, I would say people who are in working or the urban. So everywhere, if you see across India, I would say we are not there yet when it comes to financial literacy, women especially. And there's a lot of work to be done. And as you said, scale, right? That scale is so huge today,
Huge.
and it's
Yeah.
going to take a lot of, I would say, a couple of years to bridge the gap. And for that, you need strong partnerships with government or corporates or the communities to create that awareness among women to ensure that they are financially literate. And the good thing is we are training the teachers. Now the next generation is going to get trained. So as they pass out, they are already ready to, plan their investments, or so at least they would start thinking on
Something.
those
Yeah.
lines. Yeah.
Yeah. That's nice. That's nice. Tell me one thing. Are there any special instruments wherein women can invest and women get benefit? Are you aware of it?
See,
Or
there are a
what
lot of these
instruments you
investment.
will suggest?
So there are a lot of instruments, right? It is not, I would say, it would not be fair for me to say these are two or three or four instruments that women should invest in. But since women are mostly risk averse, I would say look for some safer instruments that can give you some good returns. And if your capital is guaranteed, I would say that's a good way to start with, because when you know your capital is guaranteed, you're kind of safe. And start with something like that, and with minimal risk, you should probably start looking at investing. That's how I would look at it. I would not say product X is great or product Y is great or an instrument, because there are so many avenues like as I said, the NPS, your PPF, your mutual fund, your capital market, your debt funds. There's so many things right today. So there's a
There
lot
is
of
a fixed
avenues.
deposit which has come.
Yeah.
There is a fixed deposit which has come recently, launched by government.
Yeah.
The
The
government
Samruddhi
scheme.
Sukanya Samruddhi
Samruddhi
scheme
Sukanya. Yes,
for
yes.
for
yeah.
girl child, and it's I
Yeah.
think for a 15-year term. That's something you're very safe
So that
investment,
is,
I would say.
that is one. And there is a fixed deposit which is you can invest up to 2 lakhs and you can
Correct.
earn fixed interest for 2 years. So that is something which is so. I think even government overall want to encourage women investors. What's your
That's
view
right.
on that?
That's right.
So tell me one thing, what Kindle is doing, something special. Are you doing something special for women to get women digitally knowledgeable, or anything which you have in mind, or anything as a project you want to launch, or anything which you want to do? Because still the way financially women are not so literate, even digitally, as you said, it's the same thing. That is, Kindle is taking any specific step on that?
Yes, Kindle, recently we launched this program called Cyber Rakshak to train more than 100,000 women in cybersecurity, rural women in cybersecurity, to help them navigate through the cyber threats and crimes. So while the digital and financial literacy aspect is one part where everyone is becoming digitally literate and financially literate, but you also need to safeguard your digital and your financial space. So how do you safeguard your digital and financial space? Through a cybersecurity training. And this training is something that we launched in partnership with CSC and Jeevitam. Of course, Jeevitam is our technical partner in this program. And we launched this program in January, and so far we have already trained about 5,000 plus women so far.
That's
And
nice.
some great stories here. And I would like to probably take about a minute to talk about this whole program, because what has happened is we have seen, we talked about women, we talked about digital literacy, we are talking about financial literacy. And the women, especially the beneficiaries, some of our beneficiaries doing some amazing work here. And this is something to do with, the program that we launched is mostly to do with, financial inclusion for women and women economic empowerment. And the beneficiaries who are there, who are basically mostly the VLEs and self-help group women and bank correspondents, right? They are doing some amazing work, right from, someone has set up a computer lab or a computer center in the village. Earlier, people had to walk about 10 miles to get access to a computer. Now this lady has set up a computer center in her village, and she has about 10 plus computers, and provides free education to girls in that center. And there's another person who's running a vermicompost business. See, the rural entrepreneurs are growing in numbers, and we see a lot of benefit here. And there's somebody who's running a sanitary napkin unit, somebody is making hundreds of masks. There are someone who's running a LED bulb manufacturing unit, right? There is some great, amazing, very inspiring stories that we hear from our beneficiaries, and the impact that the cybersecurity program that we have launched is creating is, something great. And they've come back to us saying that this program has really helped them to save and to safeguard their business and their own personal transactions, right? As another step, what we are doing is, as a value add to this program, we also heard from them, but what are some of the other additional help they would need? And few things like soft skills and digital platform usage are some of the areas where they've asked for help. And through our volunteering initiatives, we have launched these programs, and very soon we'll be starting the trainings for our beneficiaries as well. So, digital literacy, your safeguarding your digital space, combined with financial literacy, I'm sure, will be a good bundle or a good package for us to support not just women, but everyone to be,
Sure.
inclusive, and then be literate in all these segments. That's how I look at it. Give it a holistic view rather.
Great, great, great. So, what are the few points, as a guide, you will, you will convey to women that women should follow while doing investment? Say 3, 4 points which you feel that pick and choose, and women should definitely do this if not anything else.
See, one is safeguard your future, create wealth. That is very, very important. Be financially independent. Crucial for us, right? You have to be financially independent. However, whatever is happening, however secure you are, however financially secure that the family is, but as a as an individual, you have to have your financial security. Make sure that you create wealth for your own good, for your own retirement. I would say, and go one step ahead to help people, right? Go one step ahead to help the community, to support your own community.
That's very
All
nice.
this can be done only when you are financially secure. So I would, three things: invest in some safe instruments, and look for those instruments where that's going to give you some good return but safe. But overall, I would say financial security and creating wealth is key for you to really be financially independent in life.
Thank you so much. Munish, would
Yeah,
you want to ask any
yeah.
question
I
to
just
Girya?
thank you.
Yeah,
You
I
understood me
thought
now.
so. I thought
I was
so.
I was holding myself. It's a very good talk going on, and so nice to hear, Girja's perspective on various aspects of digital and financial literacy for women. See, my question to you, Girja, is from a livelihood perspective, right? We often hear, from about low women workforce participation, especially from the women in the tier 2, tier 3 cities, because there are not many work opportunities available, and the overall environment is still not very conducive to women to come out. And this holds fact still for the tier 2, tier 3 cities. So from that point of view, where we have a challenge to increase women workforce participation in India, and especially the rural women, right? How is digital literacy going to help them in that direction? What is your point of view on that?
So, see, digital literacy is crucial. One is, as you said, women workforce participation, in fact, has reduced if you see post COVID, right? Because
Yeah,
women are primary caregivers, and on many occasions they are not able to, balance work and family. So they are forced to kind of resign from their jobs. Many of them, I've heard my own circle, many of them who've been in some great, doing some great work, were forced to quit their jobs to support their family because they are the primary caregivers. Now, with the digital literacy, one great thing that is happening today, and is the remote work, right? So,
yeah.
remote work opportunity is something that's really great, and I would say it's a boon for women, and that is something that they should look at, whether you're entire to city or whether you're in your own farm. This is something that you can contribute if you're digitally literate. You can start picking up those remote jobs and balance both family and work, at the same time be financially independent.
I think this is something very, very important which you are saying, right? Because I can give you my two examples, right? Jeevitam example, like we have this policy of work from home. So we have around 60 odd, colleagues who work with us, right? And 70% of them are women, right? So when we are talking about,
That's a
we have
great
70%.
diversity. Yeah,
Yeah,
even
diversity. So we have 70% of women, and one of the prime reasons of this women being part of in such thing is, what we have thing is they are all are working from home, right? So I can see there is a lady, Siani, she's from Bardhaman, right? I think I've spelled the right town name. I always confuse that. So she's from Bardhaman in somewhere in West Bengal, right? I still have not seen that. Like I'm told it's close to Kolkata, right? Then I have another girl. She's from Nagpur with us, right? Who's working. These are all IIM graduates who have joined us, right? Because but they wanted to stay at home, right? And they wanted to be. If before COVID, if they had to look for a job, they have to come out to the metro cities. They had no other option to work from home. So I think this is something which is opening up big way, right? So the women who are educated, they want to have a workforce balance, and they are able to do it by working from home, remote work, what you call. Same way, I have my example of my daughter, right? My daughter, she's working for a US company, and she's working from home again, right? She is there. So you are able to, and she gets all those facilities which a US company probably will be giving, right? So there is a remote work being not only offered by Indian companies, but overseas companies also are coming to India and offering remote work. My younger one, when she was in class 11th and 12th, she was a cloud kitchen entrepreneur and working from home again. She was studying 11th, 12th class, and she also was earning for herself by becoming a cloud kitchen entrepreneur. She was selling cakes and cupcakes and all those things and making around 15,000 rupees a month, right? So I think there are enough examples which are coming. And for just wanted to get your perspective, since you are focusing on Anganwadi workers especially, right? Because I am really privileged and honored to work with you, because Anganwadi workers is a segment which can really be a game changer, right? Because as teachers is one segment which is creating an impact. Same is with the Anganwadi workers, right? They look into 100 families at least, right? And if Anganwadi workers are digitally literate, right? And challenge with Anganwadi workers, for example, we see is they are from remote areas, they are from rural areas, they are from tier 2, tier 3 cities. They are not so educated, right? Which is there. And they are earning around 7,500 rupees or 10,000 rupees as an Anganwadi worker, right? So if they are digitally literate, right? Okay, they can have more earning opportunities for them. Like for them, they can become a teacher, or they can become a tutor, or they can become a cloud kitchen entrepreneur, or they can become a reseller. I was talking to Make My Trip yesterday. They are very much looking at these women to become holiday experts, right? So having, sorry, it's a long question. I've given a little quick background to it, but just wanted to get your point of view, especially for this Anganwadi workers, which you are looking at. While making digital, you call them rakshaks, digital rakshaks, right? Which is there. But from a livelihood point of view, what do you see digital literacy will impact them?
Sorry, can you
From a
rephrase that
livelihood
last part of the
perspective,
question?
from a livelihood perspective, this Anganwadi workers, how this digital literacy will impact them?
See, as I said earlier, right, the digital literacy now has kind of become our identity, especially in the modern world. And that is something the government is also looking at, taking digital literacy through the CSC centers all over the country, right? And digital literacy is definitely a game changer, I would say. And whether it's Anganwadi worker or XYZ, person, it is definitely going to, one is the exposure they get through the
Yeah.
digital literacy program is something that can open doors for many opportunities for them. It's not just confining themselves to an Anganwadi Kendra, or just, let's say, moving into a teaching segment. It probably can open doors for many things. Maybe some of them come with those creativity, and they probably could do something in the art space, or in any other space. There could be someone who's very strong in some other domain, right? And that kind of gives them that pathway, or shows them the path to take the next step, or take the leap into that particular area, or that they are passionate about. Sometimes you're forced to be an Anganwadi worker because of your economic conditions, but this digital literacy definitely opens doors for you to many opportunities that's available on hand, and that is where you pick and choose, and that's where the awareness comes in place. And if they are provided the right channel of awareness and education in the digital literacy space, I'm sure they can do wonders.
Yeah. Last question to you, Teja, right? I see you as a thought leader. I see you as an industry leader, and with so much of experience, and the kind of profile you carry, right, from a Kindle, which is a very important profile, right? There is so much which is required to be done, right? Because you are definitely creating an impact and you are doing pretty well, right? 100,000 is not a small number which you have committed, but the requirement is huge, right? There are, among Anganwadi workers, there are 1.4 million Anganwadi workers with us. 14 lakh Anganwadi workers are there with us. So, like in the case of teachers, there are a million teachers. CBSE teachers alone, I see Anganwadi workers, there are 1.4 million, 14 lakh Anganwadi workers alone. How can, the question, this is the question which I asked the last panel also. Okay.
Yeah.
Scale
I
बहुत
know
बड़ा
the question.
है scale बहुत बड़ा है, right? Because हमारा, when we are a startup, we are looking at scale, right? We want कि यार 14 लाख आंगनवाड़ी workers क्यों नहीं? Because when we were uh, we were talking to CBSE, they said, how many teachers you have? They said 1 million. I said, how many can you train? I said 1 million. So for us, it is, if there are 1.4 million Anganwadi workers, why not 1.4 million Anganwadi kids should be trained, right? How Kindle can work? How can you work together to bring, means you are so convinced about the kind of work you are doing and you are putting your money behind it, right? That shows your commitment to it. How can you work together to bring the industry to it? Something which I want, everyone for us to understand, right? From your perspective.
So Manish, as I said last time also, I'm going to say the same thing again. It's through these partnerships, these collaborations, right? Collaborations with other corporates or others in the industry. It may not be just corporate. It could be government. It could be anyone else. So with strong collaborations, your our 100,000 can become 1 million very easily, can become 2 million very easily. We don't see the scale is not an today. You have the capability to scale, right? And you have
Yeah.
proved that. And within a short span, you've already trained 200,000 teachers, and you're looking at training another 800,000 plus. So 1 million is not a big issue today to train, but it's only I would say through these meaningful partnership you can achieve to train that many number of women or teachers. Because what happens is corporates, when it comes to investments, there are certain limitations. One corporate alone cannot come out and say,
Absolutely.
I'm going to train the entire nation, right? It's not possible. It's
Not
not
possible.
possible. So
Yeah.
only through meaningful partnerships you can achieve that scale, you can achieve that a number. So that is something I would say, that strong partnerships are key here and strong collaborations are key. Like we have seen that in COVID collab, right? COVID collab action, we have seen how various teams came together to support the communities and support people. So it's a similar action here. Through this collaboration is something we can really achieve the target, or we can even, I won't say target, we can, I would say, achieve this mantra of making everyone digitally literate or making everyone financially literate.
Thank you, Girja, for this. I will now, I think there are again questions coming our way. So, Sayani, Utkarsha, is there any questions right now from Girja? Nehal, are there any
Yeah.
questions
So
from the audience?
I'm just trying to see. There are questions. I'm just trying to see.
Yeah, so the first question has been asked by Anika. The question is, are there any investment options that are considered relatively safer or less risky?
Okay. I'm not from a financial segment
Yeah,
background,
we are
but
not.
I will try to answer it. See, every investment has a small amount of risk. Even if you have your money in your fixed deposit, there's a small amount of risk. Gold, there's some small amount of risk. So every investment has a small amount of risk. It all depends on what your risk appetite is, right? So if I, let's say if I invest 1,000 rupees, is it okay for me, or is it okay if I lose, let's say, 100 rupees, and still keep my get some money back? Or is it okay if I get my 1,000 rupees back, I'm okay to forego the interest or whatever returns I'm going to get on investment? Is it okay for me to keep my capital safe? So it all depends. It's all too personal. It all depends on the individual. What is the kind of risk appetite he or she would like to take in a particular investment. That's how I would look at it personally.
Yeah. Next question, Johnny.
Okay, so the next question is from Namrata. She's asking, how can financial literacy help prioritize expenses and save money?
That's a good question. See, financial literacy is something which is, I would say, taught to us in different forms, right from our, I would say, from our childhood, right? Starts with your pocket money. So you're given
Yes.
a pocket money and say you have to be prudent when you're spending, and you have to come back and give account to your parent as to where you've spent, how you've spent, for what you've spent. The same thing goes with life. There's no change to that, right? You're earning and you need to budget as to for what you need to spend, how you're spending this, where you're spending this, and how much can you save. It's all the same mantra. It starts with your pocket money and goes all the way when you start earning. So nothing has changed. It's just that the money that you get as pocket money is your dad's money or your parents' money, and the money you earn is your own money. So that's the only difference. Otherwise, in terms of saving or in terms of I would say spending prudently, it's all part of the learning that you get right from your childhood.
Yeah.
Thank you so much, Girija. Munish, you want to give a thank note?
Yeah. So I think there are still questions, but with the time which is there, Girija, first of all, a big thanks to you uh, for sparing time and sharing your perspectives on not only digital literacy, but I'm very happy to hear, I was little financial literacy, is something which was, you really handle all the financial literacy questions as, you could have. So really appreciate because Snail really grilled you on. I was expecting her to take you on digital literacy, but she was asking more questions on financial literacy. But Girja, thanks for answering all those questions. And this was one session which was very informal, very educative, very understanding. So thanks to you, Girja, for taking time. And more importantly, I have personal regards for you, and thanks to you for going out from a Kindle perspective to train around 100,000 Anganwadi workers. I think this is a bold step from your side and very important step, which will help, as among the communities when we see, if we prioritize, is teacher is one of the important communities, so is Anganwadi. Equal Anganwadi worker community is an equally very strong community, which has domino effect, I call it, overall to the industry perspective. I think that is very, very relevant, and your support, your altogether all guidance and everything is very, very important for this industry to go together. Uh, so thank you, Girija, over for being there with us. Uh, with this, I close this first of our digital and financial literacy summit. I will like to again thank our AMC partners, Mr. Kailash Kulkarni from HSBC, CEO HSBC. He came in and he shared his perspective. I would like to thank Mr. Sunil Subramaniam, CEO Sundaram AMC, to come and share his perspective. And there is also very, very, from a tier 2, tier 3 perspective, I think this is very important points he made out. I would like to thank Mr. Swaroop from the Mirai AMC to come and support. They have also been supporting financial literacy for teachers. They have been a big support to us. So I think big thanks to all the AMC holders. I have a big round of applause for also our training partners, CIL and Cafe Mutual, right? Without them, this trainings would have not been possible. I have also a big regard for our partner UJS, which is doing training for the Anganwadi workers. We have trained around 5,000 plus Anganwadi workers in a very short span of time, and we have a long way to go, right? Which is there. So yes, A big thanks to our training partners for being there with us, and a big thanks to all the participants. I'm seeing around 200 plus participants who are there still. Right, they have been holding on. I'm sure you must have found this whole summit very relevant for you. Financial and digital literacy is very important for the social and financial inclusion. And I keep saying, in this 200 people, I see so many people who are from government side, who are from academia, who are from CSRs, who are from corporates and startups, and who are from the beneficiaries, right? All the beneficiaries, whether it is Anganwadi women or teachers or students. I think all we have a mixed bag of everyone, and that's what makes this whole summit a big success. I've been talking to Nehal on making this a regular phenomena, right? I was very keen to make it a monthly thing, but it becomes too much and too early. So we are still deliberating on whether we should do it or do it on a quarterly basis. But one thing for sure for me after today's thing is that yes, this has to be done regularly, right? The whether it has to be done monthly or a quarterly, we will decide in due course. But yes, रेगुलरली तो होना है. अगर मंथली नहीं स्नेहल नहीं मानती है तो मैं क्वार्टरली तो करूंगा ही करूंगा, राइट? एंड a big thanks to you, Snehal, for leading this whole initiative, digital and financial literacy initiative within Jeevitam. You are as everyone says, you are a very passionate person, very hardworking person, and for with you, I'm sure in Jeevitam we are going to train around 2 million sort of people this year. At least on the digital and financial literacy. So I think let's work together towards this space and take it to the next level. Thank you for all my team, Jeevitam, Viren, I see Utkarsha, Sayani, everyone from the tech team who has been working tirelessly to make this summit a success. A big thanks to all of you, and thank you.
Thank you so
Thank
much,
you, Girijam.
Munish. Thank you so much, Snehal, and thank you, Jeevitam team, for having me here, giving me this opportunity. Thank you so much.
Thank you very much.
Thank you.
All the best to you, everyone. Thank you.
Thank you.
Thank you.